Hello and welcome to another update video about Bitcoin Cash, as a lot of people are currently interested in this coin. So we see obviously some significant upside at the moment. Nevertheless, you always need to take it and understand it in the context of what the chart is doing. You see that better on the linear chart. If you zoom out, really not too much has happened. But overall, of course, the price doubled. Let's just go back to the log chart. We can see the waves a little better on this chart. Yeah, I mean, price basically doubled since the June lows in a very short period of time. And basically nearly tripled since November 22. With that, it's short term certainly outperforming Bitcoin, which basically doubled its price since the November lows. But that doesn't necessarily mean it's bullish overall. Short term, yes, short term we have an uptrend, but we're now in resistance, as I already explained in yesterday's video, where we have a decision point, okay? So the idea is that price rallied in 3 waves only between December 18 and the May 21 high. So this is really a very clear 3-wave structure. I have a wave A to the upside, I have a wave B to the downside, and a C wave to the upside, which peaked in 21. There is no 5-wave move. There is also no way of constructing a 5-wave move into this. This is a crystal clear 3-wave move only, which puts this entire chart into an uncertainty corner, okay? So it makes the chart uncertain at best, or at worst bearish. I showed you the comparison yesterday in yesterday's video, the Bitcoin Cash chart compared to the Bitcoin chart, and it's just lost 98% of value compared to Bitcoin over the years, which tells you a lot about the long-term performance, right? But of course we can see some short-term upside. But you know, if green candles alone were a sign that a bear market is over, that would be too easy. It's not. We need to understand the structure. And we currently see 3 waves to the downside. So I have a 3-wave move up and I have a 3-wave move down. I mean, unless this is developing as some kind of a massive correction or triangle, we are waiting for 5 waves down. So the ideal structure would be a wave 1 down, done, a wave 2 to the upside, done. This move down was impulsive, 3rd wave. The move up currently looks like a 3-wave structure, wave 4, and the wave 5 would still happen later for another bear market low, which could be a larger wave 1. Then we could see a deeper pullback in a larger wave 2, a wave 3 down. Eventually it would probably die as per this wave count. But condition is for this wave count to remain correct, price needs to hold below $268. So we're getting closer to that level today. If I zoom in a little bit, yesterday I showed you the level that if price holds the level, we can push higher. So I gave you this orange support area in yesterday's video and said, okay, we can focus on higher short term as long as this orange support area is holding. So the support area did hold. And here the idea was that as long as the 50% retracement at $152 is holding, it can push higher. And the next target would be the $268 US dollar level. Okay, so short-term trend is always important to follow because that is how the larger time frame count will be confirmed in the end. So I think it has a good chance to rally higher now, given that it's holding the support area. And next resistance, major resistance, will be the 50% retracement level at $268. If we zoom in a little bit, you can see how price reacted already to the 38.2 retracement level, which is normally the ideal target for a 4th wave, here at $206, but it broke it and is now continuing to rally. That's why it's so important to have an understanding of the relevant support areas, that as long as they are valid and hold, the focus can be on higher. Also, the trend line that we talked about never broke. So yeah, focus is short term on higher, and then we need to see how it reacts to the $268 level. What happens if it breaks above that? So obviously in the short term, it's important to observe the short term trend, which is still up. And then if the short-term trend goes higher than a wave 4 pullback would allow for, then we need to look at alternatives. What would be the next alternative? My alternative would be that if price breaks and sustains above $268, I would say, okay, probably then this wave 1 already finished here and we're in a larger wave 2 pullback, which could go significantly higher. And that would be an area where we say, okay, between $382 and $888. So that would be quite, let's say, short-term bullish, but it would still be embedded within a larger corrective structure. But first of all, we need to pay attention to $268, and all the other comments from previous videos remain valid. And as soon as we break below 152, which is the short-term support, I think we have confirmation that we're heading down in the wave 5. So to keep it very simple, first of all, as long as we're holding 152, the short-term focus can be on higher. Next target 268. If we don't get rejected there, then I think we have a larger pullback in a wave 2. Until then, I assume this is the count, and we should see a reaction somewhere in the red zone, which would lead to another low before we can get a larger rally in a wave 2. Some kind of a rally is expected. Question is just, how high do we go now? We are rallying anyway. But it all depends on the pivot at $268. Yeah. If we break above that, we have some clarity in the sense that, okay, we are probably already in the wave 2 pullback here, which can go a little higher. Besides that, all of that would not change the larger trend on this chart, which seems to be down. And looking at the, let me just add the RSI to this chart. 1 second. Take that out. I don't think I've got the, no, I had to take out the RSI for some reason. So add the relative strength index back to the chart. So we are now massively overbought. Yeah, I think it's the highest reading since March 2019. Very important about overbought levels. I'm not really a fan of watching for overbought as signals for a top. It is just a sign that the trend is very strong. So for example here, when we were overbought last time like that in April 21, it still pushed higher afterwards. It was still fairly close to the top, but it still pushed higher. Okay, here we had a top signal that was in 2020. Here we were overbought, pretty much a top signal as well. Here it pushed still higher. So we always need to be careful with those overbought signals. It tells you that yes, we are probably close to a top, but that's not a guarantee. We've seen it many times in crypto that it can be embedded in an overbought region for quite a while, for weeks, if not months, okay? So on the weekly chart, we're now overbought as well. But again, here, look, we were overbought in January 21 on the weekly, and it pushed still way higher. I think the price doubled afterwards. So just be aware that overbought alone doesn't really give you anything, but bearish divergences will be a sign, but there is no bearish divergence yet. And the short-term trend is still to the upside. Be aware of that, right? Even though there is a resistance level here, we need to be very mindful of the short-term trend, which is still up. And that's why I gave you that the trend line in yesterday's video as an orientation. It can still push higher. But I think if we get a break of the trend line here, that is the first sign that the trend is breaking down. So I'll keep you updated. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.